Today's video, I want to break down a question that a lot of people have been asking me, especially our investors. Dr. Johnny, where do you find the deals? And B, when you do find a deal, how do you know which is a deal that's worth investing large sums of capital in and which type of deals keep a mile away from, right? Red flags everywhere. How do you decide? Well, in today's video, I'm going to break down my process of how I get deals and how we evaluate them. And hopefully this will give you a little bit of insight into what a professional does when they go about making an investment decision in passive real estate. For those of you who have never met me before, my name is Dr. Johnny Walker, aka Dr. Janatha Withanachci. I'm a veteran endodontist of 15 years, but what has allowed me to cut my clinical practice down to an ideal part-time schedule is my investment in real estate. I've been investing in real estate for the last 15 years, and it has made a tremendous impact on my life. As I mentioned, allowed me to work an ideal schedule. It also has given me time freedom. It gives me the time to spend enormous amounts of time with my children and my family. It allows me to travel 6 to 8 times per year, as well as pursue my passion, which is educating my fellow doctors on how they too can achieve financial freedom through passive investment in real estate. Let's answer the first question. How do we get deal flow? I'll tell you how I used to do it. Before, the main way was attending lots and lots of conferences, retreats, summits, getting to know who the biggest movers, shakers in the industry are, who are doing great things. So whenever these operators, they have deals, they have webinars, I attend them. Even if I may not be interested in investing, I'm interested in learning about them and their process, about their investment thesis. I'm looking at who are the main key principals in these deals. Right? I want to look at their history, at their track record. So that's one of the more superficial steps that I do. Now, if there's a group that I'm interested in learning more about them, I'm going to schedule a call with them. I'm going to tell them, hey, look, I have a real estate investment firm. I represent a group of dentists that are looking to invest in quality products with the best in class operator. And I'm very clear about that. I'm very transparent. And I ask very pointed questions that may come off a little as rude, but they're nothing more than due diligence questions. I've even taken the steps of flying to their city where our head office is located. And you should see the principals take a half day or a full day to spend time with me. They're going to walk me through some of the properties that they're already working on, see the progress that they're doing, the properties that they are managing. Are they in good repair? Do they seem like they're operating well? Right? Small things like that are huge things. The way they do anything is the way you do everything. So you get to pay attention to that. You get a really good knowledge and idea about who that person, the principal of that real estate investment firm, is as well. So those are some really great ways to get to know them. After you get to know them and follow a few of their deals, I follow a deal for a couple years. Sometimes I might even invest as a limited partner just to see how the process goes. If things are going really well and projections and communications and them making the great decisions that investor-centric in putting the investor first, these are all things that I'm paying attention to. And only after that would I even consider bringing a deal to my investors. But we've actually made this process even more professional and the due diligence even more systemized. And this is what I'm excited to share with you because this is a relatively recent progression. So we have a fund manager group now, right? So I'm a fund manager. I create real estate funds. I negotiate great deal with operators. And then investors invest into our fund and the fund will invest into the real estate deal. And this gives us pre-negotiated, much more favorable terms because we're writing a large check. It works out really well for investors. Investors get a better return. They get a well-vetted product. The sponsor or the real estate operator gets a big check. Instead of talking to multiple investors, they only have to talk to 1 or 2 fund managers and they can raise all the funds that they need for their real estate projects. Now, going back to our group of fund managers, now in our group has grown to 43 fund managers. Right? These fund managers are savvy real estate investors. This group is a serious professional group. And what we do now is we use our collective wisdom, our collective knowledge in the industry, and we bring it all together in one room. Right? So we have the ability to trade insider information about operators. Hey, I've never done a deal with this group before, right? So I want to learn about them and I want to go through this whole due diligence process of learning and meeting them. But guess what? If you know of others that have already done deals with these people, have great investor experience where investors got great returns, this gives me a much better idea and feeling about these operators when we've already have track record that's firsthand from my partners. So that's one of the things is ability to trade insider information as well as previous investor experiences with these groups. Number 2 beautiful thing about this group is that we have a proprietary due diligence checklist, right? This due diligence checklist is literally 202 items split into 3 main areas on the deal itself. So underwriting the deal, right? Going through the spreadsheets, running through the analysis, doing IRR, cap rate projections, etc. Right? So that's one major area on the 202-point due diligence checklist. Area number 2 is of the market that this property is located, as well as the submarket that the property is located. So now we're going to look at different demographics. Are we looking at, hey, are there jobs growth in this area? What's the median AMI? What's the average median income in this area? Can they afford the rents that we're charging in this asset? right? We're looking at other things like new construction. How many new construction apartment multifamily units are going to be coming online in this market? Brand new units that are coming on could potentially create a competition for yours. So you have to look at new construction units that are coming online. You got to look at what's the existing properties are. How much vacancy are there? What's the absorption rates of the apartment units? How long are they vacant for? So you have the ability to go in and do due diligence at the asset level and sub-market level. And of course, the third area is on the sponsor itself, right? So we talked a little bit about that, the general partner, and some of the questions that we're asking. Hey, what's their track record? What is their skill set? Have they experienced a downturn before? Right? Economic downturn. How did they manage that downturn? Have they had any previous capital calls, bankruptcies, foreclosures? These type of information is not, the people are not forthcoming with this information. So you have to pointedly ask it to them, otherwise they might not ever tell you. If things do hit all the check marks, which is very few deals get through this filter, right? We start off with a lot of deals, we look at a lot of deals, we're gonna come to how we get the deals and how we do that process in a second. But we look at a lot of deals and it goes through a funnel. Are they good quality enough to go to the second level? Yes. If they're good enough to go to the second level, then we go to the due diligence process. Now, when you go through this entire robust due diligence process, after we've done our checklist, then the funnel gets to only a few deals, actually squeezed through at the very end. And those deals are cherry-picked, the very best deals. All right, so let's talk about the second part of the equation, which is deal flow. How do we get the deals in the first place to fill this funnel at the top? This again comes down to our fund manager group, our community, right? So there's 43 of us, and we all know a lot of industry sponsors and general partners that each of us might know about individually. If we know that they have a great deal, if they have a deal that might be worth looking at, someone show this to our fund manager group, and then I can now lean on the others' experience, expertise as well, previous experience and knowledge about these people, and make a more wise decision, right? So we can invite anybody of our 43 people. We just have each of us have our own network and no different groups, individuals, people, and we get them all in to come and pitch to our community. So now when we call these people, they say, yes, of course. We have the ability to go and get a large check, and we don't have to talk to 100 different investors. Yes, we would like to be involved with this fund manager group that you guys have. Operators love pitching to us because it's a great place to come and get large checks. Right? So that's one way that we get deal flow, is that we just use our collective network. And when there's deals present, this is how it comes. That's one way. And the second way is that we're starting to become known, right? Our fund manager group is starting to become known by operators. Like, hey, look, we need capital. That's a great place to go. They're really tough. They're going to ask us all the tough questions. They're going to put us through the ringer, and they're going to scrutinize everything in our business plan. But we don't have anything to hide, so we are going to go pitch to them, right? So that's the type of operator that also is starting to come to our group, and they voluntarily are finding out and coming and showing us their deals. So now that takes care of that part, right? Now we got a lot of deals. Every Friday we meet twice a week. Once on Tuesday, once on Fridays. Fridays is our pitch day. On Fridays, this is the opportunity for sponsors to come and pitch a little bit about their company, a little bit about their deal or investment that they want to fund. If anybody's seen the show Shark Tank, you have 5 sharks and you have business groups that come and pitch their business and they're looking for funding. So this is basically Shark Tank for multifamily real estate or commercial real estate in general. We do other things besides multifamily, like mobile home parks and stuff like that. But mostly, so far, it's been multifamily real estate. If there's a sponsor watching this, they're going to be scrutinizing every word that you say. But if you're a good sponsor, you got it buttoned up, you know your stuff, you've done your underwriting to the nth degree, and you feel confident, we invite you. We want to do business. We're looking to do business, but we're only looking to do business with the best. So now we've done the due diligence. We've passed the stages of, hey, this deal is a go. We're going to raise capital for this deal. So now the next thing that I do is, if I'm one of those fund managers and we just closed on a deal, we were able to buy a 288 unit multifamily real estate property in booming Dallas, Texas at a 30% discount. And if you want to know why multifamily real estate's on a discount, check the last video, multifamily real estate meltdown of 2024. Click on that. You'll see why there's a massive discount. And this is the best time in a generation to invest. That's another story for another time. But as you see, our fund manager group, to summarize, it allows to get really vetted deals, right? So when it goes through our whole process, the product that comes out at the end of that funnel is a very highly vetted, trusted opportunity that's had professional analysis of it. We've also had the ability to raise a large tranche of capital for this deal. We've also had the ability to create a very favorable return profile for our investors. So this has created a win-win-win scenario, which is always the preferred way in business. You don't ever want to have where one person's winning and one person's losing, right? This is a situation where you've created a win-win-win, truly win-win-win scenario. So that's our process. You can see what it is. Let me know in the comments what you think of the process. Where are there room for improvement? Is this a good process? Is this bad? What would you change? And if you're interested in learning more about our investment opportunities, check out our website. It's in the description below, walkofwealth.com, and join our free investor club. We'd love to have you. All right, guys, that's it for today's video. Click on the next channel. We're going to keep the heat coming and your bank account's growing. Boom.